Good morning, good afternoon, good evening, no matter where you are in the world. This is Howie, and I'm here to help you win with money. In today's episode of Exposed by Math, I'm going to cover student loans. Is there a better solution than loan forgiveness? Exposed by Math are generally longer, so please watch these things multiple times. And if you love what I teach, make sure you share it with your friends and spread it out. For this particular video, I've been thinking about this for well over 10, 15 years. I didn't run a channel back then, but I wanted to put it in video format so people can see that you can have great ideas way before governments, Congress, or anybody else come up with a solution. So I want to put these out in video format so one day we can say, dude, that guy had a solution in video 5 years even before anybody thought of it. Like I said, I had this idea for many, many years, but I want to put it in video format. 1.6, $1.7 trillion in student loan debt. It's growing. Some will never pay it down, and that's a problem too. We don't want to put people in a situation where you can't move on with your life, you can't buy a house, you can't get a car, you can't do anything because your student loan debt becomes a really large percentage of your income. It becomes really the biggest part. Some people loans are bigger than their mortgages or their living expense. So let's look at these stories first. The first one is from CNBC. Here's how to prevent it from happening. This one is updated from 2 years ago, 3 years ago, 2018. So let's just go real quick. I want to show you this scenario here. It goes and it covers this guy. Rick borrowed $55,000 in 1990s, and look at his balance today. And this article goes on to say this is normal, and it explains how this works. Let's say you borrow $50,000, 5% interest rate. Before the first bill arrives, what happened? They tack on some interest. Because some of it is you can start accumulating interest during your 4 years in college. It tells you what to do. What if you don't land a job? Here you go. You got a deferment. And it explains how this thing gets larger and larger. And it goes on and it covers different things. And I'm not going to read this article. You can always pause it. But you can see how in life when bad things happen, you can take a deferment. You can pause paying it. You can do whatever you want with your student loans. But you can see how the amount from 50 goes up. And I'm going to show you another article. Here's one of a story about a guy named Chris. I'm going to scroll down and it tells his story. And it starts down here where it talks about when he first started, he borrowed a small amount. He went to grad school, graduated owning only 14 grand. He went to law school and had a total balance of 79. Talks about how the tax law changed, how things went from bad to worse with the interest rate. He had to pay more. You know, it talks about his career a little bit, and it talks about how he got wage garnish. And you read all this and look at the numbers. He paid $190,000 on his original debt of 79. His current balance, and you see here is a problem where do we do mafia type actions against people with student loans? Think about that. That's like a mafia loan. And so we want to come up with a better solution. Where in the world can you borrow $79,000, pay $180, and still owe more? Student loan is one. And in fact, credit cards can be like that. So let's talk about what the problem is, and then we'll try to come up and talk about this. Is forgiveness fair to all? And some people say, no, if you forgive $10,000, I think the percentage of people who get rid of their loans is pretty small. I think it's like 20 or 30% will bring their balance to zero. But there's a lot of people in the six figures of loans. And I don't remember what the percentage is. I think it was 20 or 30% of the population may have $100,000 or more. Does debt disappear? And in forgiveness, if you're under whatever the amount of forgiving that they're forgiving, your debt will disappear. Traditionally, right now, your debt will never get wiped out, even in bankruptcy, Chapter 7 or 13. Can the rich benefit? Yes, obviously. Who borrows $200,000? Lawyers, doctors. There are some people who are not in that category who has loans of that large, but I understand that argument. Who does it help? It doesn't help all borrowers, right? The forgiveness it's kind of a unique one. Even some people are arguing, well, you can help some people and it's nice to bring people's balance to zero, but does it really solve a problem with some people? If you're borrowing 150,000 and you forgive 10,000, does it really help at all? Does the government or the lender lose? It could. If you never paid on it and it gets wiped out, it is possible that the government or private lenders who lend you money can lose. And does this guarantee the lender a fair profit? And it's not always. So let's look at a better solution. I'm going to load up a trusty spreadsheet. And I think Rick actually owns 55,000. So let's update that. The percentages don't really matter. I'm using a low percentage, but it's all formula based. You can see that. I don't care if you use 15 years. The numbers will change, but we're just sampling this out. Here's an example of if you borrow $10,000, what if you never paid? It's possible for your balance to grow. And here is the percentages, and I show you what your loan percentage is. Here is the story of Rick. $55,000. His current balance is $300,000. And look what his payments will look like, even at a 4% interest rate. It's $3,000 a month. That's more than some of y'all mortgages. And that's a mortgage for like a $500,000 house or whatever, right? I mean, at a 4%, it's a $300,000 house. But you can see the numbers are really, really large. And here's that story of Chris, the guy who borrowed $79,000 with a law degree. Look at his current balance. And based on those numbers, you see how the percentage over the original is much higher in the total month. So what am I proposing? We need a way to change how interest and loans and penalties are calculated. The IRS will give you a penalty and charge you interest on top of it. And until you pay it off, they keep on doing that. So the IRS, we understand how they work. But student loans shouldn't have that same type of quality or principle on how interest is forced upon you. So that's what I'm proposing. Let's come up with a way where every side can profit from the product, which is the loan, but at the same rate, there's a maximum cap to the penalties and loans of the loan. So here is what I'm proposing. Same numbers that we looked at, and this was 55,000, I believe. So let's fix that. So here's what my rules are. There's no forgiveness of any student loans. They never disappear in Chapter 7 or 13 bankruptcy. What I'm suggesting is you cap the total interest based on the lowest balance of the loan. Do you understand that? If you never pay the loan, the worst scenario is always 2.5 times your starting balance. That's the max. But if you're a normal person, and I think most people are with student loans, you actually start paying it down, and then life happened. Maybe you lost your job, maybe something happens, there's some medical emergency, and that's what causes you to fall behind. So this concept of let's cap it based on a number. If you can't pay it off, right, in full, interest rate accrues until the cap maxes. And then there's no penalties forever. Interest rate doesn't go on forever. And I want to introduce something really unique to this, because the problem some people have is, do we allow people then to have 50-year loans, 60-year loans, right? If you get the loan at 20, do you allow student loans to go to the 80, 90, or 100 years old? So I want to introduce something on top of that. So after the cap, what you want to do is, I propose something as simple as whatever the Social Security CPI or COLA adjustment is, you charge someone a half of whatever that is. Whatever the Social Security adjustment is. Sometimes this adjustment is 1.5%. So for that year, we only charge half of whatever that is. So in theory, what that means is your Social Security check will, in theory, grow faster than your outstanding balance of your student loan. Now, that's kind of a weird thinking, but why would you ever want to introduce something like that? One is, some people think governments use a really low inflation number to keep certain payments out to you low. Well, if we're using the same measure, then you can't argue both sides of the coin, right? Because if you're saying, hey, well, they're charging me, I get a low raise from my Social Security check, well, then the same argument is, well, then your interest rate is only growing at a much slower rate. And I'm using a factor of only 50% of it. So no matter what, you're still benefiting. So let's go and explain how the numbers work. So in this example, your $10,000 will look like this. This is the worst case scenario. If you borrow 10 and never paid anything towards it, this is the maximum you'll ever pay. Your loan is now the max. Now, you should still have a schedule and again, right, you have a normal, the balance doesn't automatically jump to $25,000. What I mean by that is, just like your loan accrues interest today, the loan will slowly creep up from $10,000 to $25,000. And at that point, it will cap out. And I wanted to show you what the numbers look like with the monthly payment because I'm using a formula. So your monthly payment will double. But at that point, the interest rate really doesn't grow, right? You can't get more penalties after that, except for this small little adjustment that's half of the COLA. But I wanted to show what these numbers look like. But really, here's a typical scenario. You have a $10,000 loan, you paid it down, you're down to $6,200, and then what happens? Life happens. You can't afford it. Maybe you lost your job and you got a lower paying job. At that point, you struggle and you have a hard time catching up. But let's cap it. So maybe this $6,000 takes 10 or 15 years to get to this value. But at that point, this loan will never go higher except for this small adjustment, but you hit your cap and then now you got to start paying it down. So this is a lot more reasonable. But here's another scenario. What if you're the type of person who did the same thing and then you fell into hard time toward the very end of the loan? You see, this is why the capping makes sense. You don't penalize somebody at the original loan. If their lowest balance was here and then bad stuff happened, then your loan is capped at most here. And then here's your monthly payment. But let's look at the scenario with Rick, the one with the $55,000. It's the same concept. You see, the max loan is here. In a typical scenario for him, it would be something like this. Maybe he paid it down to $44,000, which is not a lot, right? He only paid down $11,000, then bad stuff happened. But at least his loan is capped. But my point is, if you're working it and you have a way to pay it down, what if he didn't fall into this situation? He fell into here. You see how you can cap it at 36 and your payment is $300. And the same thing for this guy, Chris, the one with $79,000. Let's see what would happen. The worst scenario is this. The story said he paid off $190. In this worst scenario where he made no payments for his whole life, he will only owe $7,000 instead of his $236 he owes today. But in fact, I actually think he would have been debt-free on his student loan because he actually did pay off his loans as he was going. So we just have to figure out what his low balance was, his lowest balance, and then figure out what the 2.5% the times cap is, and then you will see how a guy like Rick is not paying forever. Because this makes no sense. You see how $79,000 paid $190, he now owes $236. Using my formula, we'll figure out what his lowest balance was at any given point. You add the max interest and factor is, and that will say what the cap of the loan is plus that minor adjustment. And because if you look at this, most likely he would have paid off his loan using my formula. People would have made profit, whether it's the government or private lenders. They would have made a fair amount of profit. It may not be 20% rate of return per year, but the lenders would have made 3 or 4% of their money back per interest, right? Interest per year if you do a CAGR type formula. These people are still making money on their loans because they are lending money out. You expect people to earn a profit. I'm not against profit. I'm against something that makes no sense, that we penalize somebody forever. Depending on what his low balance is, he could have paid it off. It would have been much easier. You don't have to forgive anything. Again, you can't discharge this. You can't get rid of it. I don't want people bypassing it. In death, right? Maybe. I don't know like I said, I'm not going to cover about death. But my point is, I want a better solution. And I think this is it. It's much simpler. I thought about this for 10 years. Never told anybody. I mean, I tell some of my friends about this. But I want to put it in a video format. Let me know what you think. Let me know if you think this is more fair, or do you think it's still unfair? I think it's better than forgiveness. I think it applies to anybody with a loan. The formula applies to everybody, whether you borrow $5,000 or $100,000. I think it's great that you don't get any forgiveness. The debt doesn't disappear until you pay it. So it requires some type of interest, but it caps out. And then there's a small minor adjustment once you hit that cap, there's a small minor adjustment that it does add on to the loan. Because we want people to start paying the loan. And this also try to get rid of this concept of only rich people can benefit from a loan forgiveness. We want to make sure all borrowers pay their fair share with the interest. Does this help everyone? This one doesn't. Interest rate changes the way I do it. It helps everyone with a loan. Do people lose? It's possible, in the sense of you are losing a little bit less interest and stuff like that. So yes, I'm not going to deny that people don't lose money. But I think the real question is, but is that a fair profit? What's a fair profit? If you making 100% margins, that's a fair profit. And I'm allowing a little bit more than 100%. In theory, I'm doing right. Your profit margin is really 150% of it, because I'm using 2.5% factor. So I think my way is better. Put it in video. Share this with your friends who you think may want to see it. I'm okay with having a discussion about it. But the key is this. You got to design a solution that benefits everyone. At the same time, you want to penalize everyone the same way. And if you like this, let's start pushing this. Let's push this story out that the governments are 20, 30 years behind a solution. How can a guy like me come up with a better solution? Let's discuss this and let's push this. We need to create a new hashtag maybe to help people say, look, maybe there's a new movement. Let's solve this student loan crisis. And Solving Chaos is here to do that. As always, let's do this together. Let's make $1 at a time. And I always say, have a profitable day. Bye-bye.